Hi, everybody. Scott Riley at the Market Update Desk, September 8th. This is also called National Honolulu Blue Friday. Wow. Lions came through and beat the Chiefs last night at Arrowhead Stadium. Maybe the Lions are for real. Miracles have been known to happen. So, congratulations to all of us that have been desperately waiting for a good Lions team. And let's hope we have it this year. So, we're a little bit slower today on data being released. So, I want to go over some information that's out there, help give you a guide going into the weekend and what's on tap for next week. So today we heard from yesterday, I should say, we heard from two Fed members, John Williams, who's the New York Fed president, and Dallas Fed president, Lori Logan. So Williams said he believes monetary policy is in a good place and is restrictive. Also said the recession talks now have vanished. Who knows if those are famous last words? So he's definitely turning more to the dovish tone than the hawkish tone, which is great news for the bond market. He's clearly in the camp of pausing any rate hikes. Logan said she believes that a skip in September meeting could be appropriate, but she wanted to clearly explain that they may not be done yet. Two very good comments that came out, and it's helping us in the bond market and mortgage-backed security market. I want to talk a little bit about the jobs market now. If you look at the average revisions from the start of the year, we're seeing approximately a negative 50,000 revision to the jobs numbers each month. This downward trend in job growth is clear, and the unemployment rate is starting to tick upwards. Many will say that you can't see a recession when unemployment rate is low, but we never really get a recession when unemployment rate is higher. Rather, once the unemployment rate bottoms out, then begins to move higher, that's when we see a recession with 100% accuracy. Then unemployment rate moves much higher during that recessionary time period. Now, right now, we're at 3.8%. We ticked upwards from 3.5% last month. So if we see a recession, that will definitely be an important boom benefit to mortgage rates. So next week, here's what's on tap for next week. We are definitely back into the busy camp rather than the slower time period that we got for this week. Tuesday, 10-year bond auction, very, very important. Wednesday, CPI rolls in, and we're forecasting we're going to get a nice number on the CPI, and we're going to get a benefit. We're going to be replacing last year's number of 0.6 with likely a 0.2 or 0.3% for this month. And also, we've got a 30-year bond auction. The quantities of these bond auctions are a little bit alarming because of the potential flood of bonds in the market and depressing their value. So we're going to see how this goes. Thursday, we have the head side of the coin from CPI. We get PPI in Producer Price Index, and a very important read on retail sales. We started to see a trend downwards in retail sales, so we're going to see how that goes. So far this morning, we are getting some benefit from the two speeches that were done by the Fed governors late yesterday. Mortgage-backed securities are up 17 basis points. 10-year bond is down 3. So we're seeing a trend starting. I talked about a few weeks ago that I thought next week we'd start to see a little bit of a benefit. If we can start to bounce off our resistance levels in mortgage-backed securities that we just haven't been able to do the last 2-3 weeks, we've got some upside benefit coming, and I think that could start next week. So stay tuned. We're going to be working all weekend. Get pre-approved. Give us a call, 616-293-2189, and let's all be happy our Lions pulled one out. Thanks so much, and have an awesome weekend.